Hello, my brothers and sisters. How are you guys doing? Hope you guys are doing amazingly well. Yeah, good. So, in the let's revise capital gains. So, if income tax has to be charged on capital gains, two conditions should be especially satisfied. One, it should be a capital asset. There should be a capital asset. Two, there should be a transfer. So, how do we know that it is a capital asset? As per section 2 clause 14, the definition, we have to check whether it is a capital asset. Second, as per section 2 clause 47, we should see whether there is a transfer. If these two conditions are satisfied, then capital gain will arise, and during the previous year when capital asset is transferred, capital gain arise, that is the same previous year, it will also get taxed. Yes or no? Yes. And as per section 2 clause 14, what are the capital assets? General definition, general line, any kind of a property which is held by the assessee, whether he is using it for business or profession or not, it doesn't matter. So yes, that is a capital asset. Next, securities which is held by foreign institution investor (FII) is also a capital asset for them. Next, unit link insurance policy (ULIP), where the premium on or after the policy is issued. ULIP, where the policy is issued on or after 1st February 2021 and premium is paid for greater than equal to 2,50,000 rupees or more. So, if there is more than one policy in a financial year, then in that situation, aggregate premium, is it touching 2,50,000 or more? We have to see. Yeah, if it is touching, then it is a capital asset. Also, the same definition says that what and all are not capital assets: stock in trade, consumables and raw materials for using for the business or profession is not a it's not a capital asset, because that goes to the profit and loss, PGBP. Next, any personal effect, any movable kind of property, yes, which is held by the assessee, is also not a capital asset. But jewelry, drawing, painting, sculptures, archaeological collection, or any work of art will be considered as capital asset. Even though it is a movable property, it is used for personal effect, still it is considered a capital asset. Even in jewelry, we have to see that gold, silver, platinum, then precious metals or alloys, or precious or semi-precious stones. Also, if you see in the go to jewelry shop, all this will be there. Yes, so this also forms part of capital asset. Next, 6% gold bonds, 7% gold bonds 1980, special bearer bonds. Yes, these are capital asset. Yes, all these got matured, but Income Tax Act still has this. Next, gold deposit bonds issued under Gold Deposit Scheme 1999 and deposit certificate issued under Gold Monetization Scheme 2015. Yes, all these are capital assets. All these are capital assets. No, these are not capital assets. Yes or no? Yes. Next, is rural agricultural land in India a capital asset? Just think and tell me, is rural agricultural land in India a capital asset? Answer is no. Is urban agricultural land a capital asset? Yes. So for it to be a rural agricultural land, the population should be in that area should be up to 10,000 rupees. Yes or no? Up to 10,000 rupees. And from that municipal area, 2 kilometers, it should not exceed 10,000. Population from more than 2 kilometers to 6 kilometers, it should not exceed 1 lakh, and more than 6 kilometers, it should not exceed 10 lakhs. Yes or no? Yes. And what is the definition of transfer? As per section 2 clause 14, transfer includes sales. It is an inclusive definition. It is not an exhaustive definition. And transfer includes sales, exchange, relinquishment of asset, extinguishment of any rights, conversion of capital asset into stock in trade, maturity of zero coupon bonds, and allowing the possession of any immovable property. Also, where you are the member of corporation, society, company, or AOP. Because of you becoming the member, they are telling that enjoy a enjoy immovable property, if they are giving a kind of an immovable property for you becoming a member, in that situation, what? Even that is also a transfer. Yes or no? Yes. Following are not considered as transfer. One, if amalgamation happens, or if demerger happens, or if a whole if this happens, the capital asset also will get transferred. The capital asset also will transfer. Yes or no? It is not considered as from amalgamating company to amalgamated company, or demerger to resulting company. Any kind of transfer of capital happens. This is not a transfer. Holding company transfer the capital asset to the 100% subsidiary Indian company, or 100% subsidiary company transfer the asset to the holding company which is an Indian company, is not considered as, it's not considered as transfer. Or during liquidation you are transferring it to the shareholders, not considered as transfer. Yes, and because from you being from the shareholders of amalgamating or demerged company to this, you're getting shares of amalgamated or resulting company. Now, because there was an amalgamation, this also is not considered as transfer. Gift, will, or irrevocable trust by individual or HEF is not considered as transfer. Or distribution of asset at the time of HEF partition also will not be considered as transfer. Conversion of gold into electronic gold receipt, or conversion of electronic gold receipt into gold also will not be considered as transfer. Government security, this government security where a non-resident has transferred this outside India to another non-resident. So a non-resident to to another non-resident, a government security, also not considered as transfer. Where drawing, painting, photograph, print, book, manuscript, work of art, this you are giving to the museum, art gallery, archives, government, universities, all this if you are giving to them, then it is not considered as transfer. Next, bonds, debenture stock, or deposit certificate, you are converting it into shares or debentures, or preference shares, you are converting into equity shares. This is not considered as transfer. Next, reverse mortgage scheme, where senior citizen, where they don't have any kind of income, they have a house property, they are mortgaging their house property, and bank is giving them any kind of rent, monthly they are giving them some not rent, periodic returns, and the senior citizen is giving that kind of house property as possession to the bank. That giving possession is not considered as transfer. Yes or no? Yes. So what are the types of capital assets? One is long term, and next is short term capital assets. Once you transfer a long term capital asset, it becomes a long term capital gain or long term capital loss will arise. If you transfer a short term capital asset, short term capital gain or short term capital arise. Yes. So how can you say an asset is a long term or a short term? If it is not a long term, it becomes a short term. So what is a long term? So you have to see the capital asset, how for how long are you holding. So what is the period of holding? If listed shares or securities, or units of UTI, or units of equity oriented funds, or zero coupon bonds, all this, if you are holding more than 12 months, it becomes a long-term capital asset. But listed units up to 22nd March 2024, what is it? It is, yeah, up to 22nd March 2024, it is, what is the period of holding to be a long term? More than 36 months. But on or after 23rd July 2024, it is more than 12 months. Yes. Next, unlisted shares and land and building, more than 12 months. Next, any other capital asset, we have to have two dates. One, up to 22nd July 2024, it is more than 36 months. On or after 23rd July 2024, it is more than 24 months, sir. Yes or no? Yes. And what is the benefit? What is the benefit of you having a long-term capital gain? You can claim indexation, because you are claiming indexation. Capital gain will be less. Capital gains will be less. So that total income becomes less, and also tax rate is also lesser. Next, following shall be short-term capital gains. What are the following things? One, it is a depreciable asset. Can it be a long-term? You don't have to see the period of holding for a depreciable asset. It is always a short-term capital asset. Next, units of specified mutual fund and market-linked debentures. Even these are short-term capital assets. You never have to see what. Oh, sorry. So please write short-term capital assets. There's nothing wrong in you writing gain, but short-term capital assets is much better. Next, what is equity-oriented fund, sir? If if it is if the fund is set up by mutual fund or unit link insurance policy from an insurance company, then in that situation 65% of the fund should be invested in where? Listed equity shares of a domestic company. But it is the fund is not set up by the mutual fund or ULIP by insurance company, then 90% of the fund should be invested in listed equity shares of domestic company. Yes or no? Otherwise it becomes a debt fund. Now, how do you compute capital gains? So, short-term capital gain is sale consideration. For that, lawmakers told that full value of consideration instead of sale consideration, they have wrote as full value of consideration minus expenses. Example, brokerage. Yes, that you will reduce. Net consideration will be coming. After that, you will reduce cost of acquisition. At what amount you have purchased minus cost of improvement. Have you, after purchase, have you spent such X amount of money for a capital purpose? Then that becomes a short term capital gain. Yes. In case of long term capital gain, net consideration, minus indexed cost of acquisition minus indexed cost of improvement, because indexation will happen only and only for long term capital asset. Yes. Yes. Next, sir, how do you compute cost of acquisition? Capital asset becomes the property. One capital asset, you have to see whether you are holding it or the previous owner has given gift, will, or by irrevocable trust or any under section 49 subsection 1, that you now it is with you. Now the purchase or the whether the assessee has purchased or whether the previous owner gave it to you, where the previous owner has purchased, whether they have purchased before 1st April 2001 or on or after 1st April 2001. If they have purchased on or after 2001, you don't have to see at what price they have purchased, that you have to consider as cost of acquisition. But if they have purchased before 1st April 2001, then what will you do? You have to consider, of course, what price they have purchased or fair market value as on 1st April 2001, whichever is higher. You have to consider. Yes, sir? Yes. Next, as per section 61, for consolidation of share capital into shares of larger than existing shares. You're subdividing shares into shares of smaller amount, or you're converting shares into stock or stock into shares. All this what? All this, no, you're converting it, but at the first time what you have purchased, at what price you have purchased, that will be considered as cost of acquisition as per section 61. So securities transaction tax, what you have to do, you paid, you just have to ignore. So for sale transaction, will you include that in the expenses? No. And will you include in the cost of acquisition? No. For purchase you will not include, you just ignore it. Next, cost of improvement before 1st April 2001, anything you spend, what you do? You ignore. You ignore. On or after 1st April 2001, you spend, what you do? What do you do? You take it into consideration. Next, indexation. So indexation is applicable till when? Till 22nd July 2024. On or after 22nd July 2024, is it applicable? Yes, for immovable property. For immovable property, it is applicable. Apart from that, indexation is not applicable. Indexation is not applicable. Yes or no? Yes. So, up to 22nd July 2024, you are doing a transfer. You are doing a transfer. How do you calculate the indexation? Why are you calculating the indexation? For that, you are adjusting the inflation from the date of purchase till this previous year. You are adjusting the inflation. Yes, that is the reason. So they give cost inflation index. There's a table. It will be given in your exam. Next, ICOA. It is called as index cost of acquisition. Where how do you calculate cost of acquisition into CA? What is CAI? Cost inflation index for the year of transfer divided by cost inflation index for the year in which asset was acquired, or for the year 2001 to whichever is later. Yes or no? The same goes for ICOI, cost of acquisition, into CII for the year of transfer divided by CII for in the year in which improvement takes place. Why in year this point is there 2001 2, and in here there is no this point. In here there is no that 2001 2. Sir, if you do cost of improvement before 1st April 2001, what is it? What you ignore? So anyway you are ignoring those costs. Yes. So that's the reason that point is not there. Next, till 22nd July 2024, indexation benefit is there. So, but still, even up to 22nd July 2024, the following indexation benefit also you will not get. What are those? One, slump sale. What is slump sale? You are giving one part of your division. You are selling one part of your division. That is called as slump sale. Next, any short-term capital asset, for that will you claim indexation? You cannot claim indexation. For long-term capital asset, for long-term capital gain under section 112A, you cannot claim indexation. For bonds or debentures, you cannot claim indexation except capital indexed bonds or sovereign gold bonds 2015. Yes, but assessee, if they transfer if an assessee in individual, if he transfers sovereign gold bonds, you don't have to even calculate capital gains. You don't even have to calculate capital gains. But if the assessee is an individual and the sovereign gold bonds gets matured and he gets the money, you have to calculate capital gains. Or if assessee is other than individual, then whether you transfer or whether it gets matured, you have to calculate capital gain. Next, shares or debentures of Indian company purchased by non-resident in foreign currency. Do you claim indexation? No, you will not claim indexation. So, what is the shares or debentures of Indian company purchased by non-resident or in foreign currency? Sir, here assessee is a non-resident. When he is a non-resident, in the year of transfer, he is a non-resident and he has acquired shares or debentures of Indian company. Yes, and that too he purchased that in foreign currency. Next, how do you calculate capital gain? Full value of consideration minus expenses minus cost of acquisition. In Indian rupees, you have to calculate. Now you have to convert that into foreign currency. How will you convert that into foreign currency in your exam? Rupees divided by average rate. What is this average rate? Telegraphic transfer buying rate, TTBR, telegraphic transfer buying rate, plus TTSR, telegraphic transfer selling rate, divided by 2. Yes, like that you will calculate capital gain in foreign currency. Now this foreign currency you have to convert it into Indian currency. How will you convert it into Indian currency? The foreign currency into telegraphic transfer buying rate on the date of transfer. What is the telegraphic transfer buying rate? You will calculate. So yes or no? Yes. Next, assessee, if he is a resident individual or a chief, what he will do? What he will do? Is there any option where on or after 23rd July 2024 also can he claim indexation? Can he? Yes. What is the situation? What is the situation? How can he claim indexation? If if assessee is a resident individual and HCF, then he transfers. He oh god, yeah, I did I sir, I wrote here. I wrote here this point. Okay, I forgot to cut it. Okay, transfer of not capital asset. Okay, transfer of immovable property. If assessee is a resident individual and HCF and he is not transferring capital asset, he is transferring immovable property, okay, which is a long term capital asset, and he has acquired it before 23rd July 2024 and he is transferring on or after 23rd July 2024, then he can claim indexation. He can claim what? Indexation. Even after transferring it on or after 23rd July 2024, can he claim indexation? Yes, he can claim indexation. But he can claim indexation not while computing the total income. While computing the total income, he should not consider the indexation part. He should not consider the indexation part. Only while he is calculating the taxation, while calculating the tax, he has to claim indexation. And while calculating the tax, what is the tax rate? He should calculate 12.5% without indexation and 20% with indexation, whichever is lower. That is the tax rate. That is the tax rate. So he so it so here the first thing here he will calculate without indexation. He will calculate the total income without indexation. Yes, and he will come up with total income. After he comes up with total income, now he has to calculate tax. While he is calculating tax, indexed, he will do the indexation. Now for calculating tax, he will calculate the indexation. Indexation he will calculate. Then he will see what is his total income while doing the indexation. He will for other income he will do this whether a special rate or slab rate, he will do the calculation. For that particular selling of immovable property, he will see long-term capital gain with indexation, what is my tax rate? Long-term capital gain without indexation, what is my tax rate? Whichever is lower, that is the amount he will do for the what? He will do for what? He'll take as long-term capital gains, yes or not, as tax rate. Yes. So, in a summarized way, indexation when it will be applicable. If the capital asset is an immovable property, if the capital asset is an immovable property, then on or after 23rd July 2024, 23rd July 2000, on or after 23rd July 2024, you have to come while computing total income, no indexation calculation, but while computing the tax, consider the indexation. Yes, sir, yes or no? Yes. Other than immovable property, what you will do before 23rd July 2024, 2024, you will do the indexation. While computing the total income itself, you will do indexation even for immovable property also. But on or after 23rd July, what you will do? There is no indexation. Other than immovable property, there is no indexation. Yes or no? Yes. Next, Intangible asset, goodwill, trademark, brand name, right to manufacturing or produce any article or thing, right to carry on the business, tenancy right, loom house, route permit, other rights, anything. Yes, all this cost of improvement, if there is an expense for intangible asset, it is always nil. It is always nil. And cost of acquisition, if it is self-generated, if it is a self-generated, the cost of acquisition is also nil. But if it you have purchased the goodwill, if you have purchased the goodwill, then purchase price will be considered. Yes, is and benefit on fair market value for cost of acquisition with respect to cost of acquisition, there is no available. Yes, what is this, sir? So remember, before 1st April 2021, if you have purchased, cost of acquisition or fair market value as on 1st April 2021, sorry, 1st April 2001, whichever is whichever is higher, you will consider. For intangible asset, the fair market value is not, we will not consider. Cost of acquisition only you will consider, and depreciation will be allowed for intangible asset up to previous year 1920. Sir, yes or no? Yes. Sir, capital gain will be taxable in which previous year? In the previous year in which transfer takes place. But there are three situations where even though transfer takes place, it will not be taxed in the previous year where it transfer takes place. Is previous year where transfer takes place, in that particular previous year it will not get taxed. So what are the three situations? First, regarding insurance compensation, where due to any damage or destruction of any capital asset, the insurance company is giving a claim. For that, your capital gains has to be taxed. In this situation, the full value of consideration is whatever amount they are receiving minus what is the fair market value of the capital asset. If any other asset is given, you will consider fair market value. This is the full value of consideration. Yes, but when will we, what will be the cost of acquisition? Should it be long term? Should it be indexed or not? How will you know? What will be the period of holding? Period of holding will be till the damage or destruction takes place. Yes, not when damage or destruction took place, then they got insurance claim. When will transfer takes place according to them? Will when I get insurance claim, that is the year transfer takes place? No. When destruction transfer, when destruction or damage of the capital asset happens, that's when transfer takes place. And what is the period of holding? What should be the period of holding? From the date of purchase till the date of destruction. And indexation also, we should see which year indexation we should see, the damage or destruction. Yes, but what about in which year I will tax? I will tax in the year of, I'll tax in the year of, good, when insurance is claimed. When insurance is claimed, that's when I will tax it. Yes, sir. Yes. And what about compulsory acquisition? What about compulsory acquisition, sir? Um, this compulsory acquisition took place. Yes, and then you are getting compensation from the central government. Yes, sir. When is the year of transfer? Year of transfer is when compulsory acquisition took place. What about period of holding? From the date of acquisition till compulsory acquisition took place. What is the indexation? Indexation also here. Index. What about when it will get taxed? It will get taxed in the year compensation is received. Yes or no? Sir, yes or no? Yes. And what about enhanced compensation? If he is going into court and court is giving him some extra amount of money, in that situation, what when he is receiving the money, and that year will be the that year it will get taxed. But one thing remember, regarding the original compensation, even if you are receiving the very first in there are two installments, but in the very first installment the entire amount will get taxed. The entire amount you consider sale consideration. Yes or no? Yes. And exemption under section 10 clause 37, where in case if the immovable property, if the compulsory acquisition is an urban agriculture land and the assessee is either individual or HUF, in that situation you're getting there's a compulsory acquisition. It is exempt, it is not taxable, it is exempt, but there's a condition. Either the assessee or either the individual or the HUF or the parents for the preceding two previous years has to do the agriculture. Yes or no? Yes. Next, conversion of capital asset into stock in trade. What you will do? Conversion of capital asset into stock in trade. Then only sale took place. Uh, what is the year of transfer? When conversion took place, that is the year of transfer. And what about period of holding? The day I purchased till I converted, that is the period of holding. And what about indexation? Indexation, which year should I consider? Year of transfer, which year I should consider? In where conversion took place. What about sale? Sorry, what about tax? When I should tax it? When the stock in trade gets sold, that's when I should tax it. Yes or no? Yes. And how will you do the calculation? You will consider fair market value. You will consider the fair market value as full value of consideration, because you did not sell it, but you're considering fair market value as fair market value as full value of consideration. Then you will see whether it is a long term or short term. You'll do indexation. After that, the year when stock in trade is sold, that is in that previous only you can get tax. Yes or no? So the time has come as you are selling it. In this situation. You are going to minus the fair market value, this amount. Yes sir. Then PG, you'll come over the PGBP. I gave an example also in the class, remember, but this is not important. What if from stock in trade you convert into capital asset? You what, as per section 28, it is a PGBP income, so that you'll consider fair market value as an income and capital asset, and now you're selling that capital asset. In that situation, what is the fair market value? That will be the thing minus, sorry, full value of consideration. What is the sale price you're getting minus fair market value when you converted this date. Yes, is the cost, is the capital gain. And is a depreciable asset a long-term capital asset or a short-term capital asset? It's a short-term capital asset. So always there is no indexation. Yes, there is no indexation. Yes, sir. So if all assets are transferred, in that situation, will there be a short-term capital gain? Yes. When sir? When the full value of consideration is more than opening WDV plus purchases. Yes or no? Actual cost. And can there be a short-term capital loss? Yes. If full value of consideration is less than actual cost plus opening WDV. Yes or no? Yes. Sir, what if I did not transfer all the assets? Can I get short-term capital gain? Sir, yes, sir. When a full value of consideration is opening WDV plus actual cost, then I'll get full value. Then I'll get short-term capital gain. So, can I get short-term capital loss? No, there is no short-term capital loss if you have not transferred all the assets. Yes or no? Yes. Next. Sir, in case of what is specified mutual fund, by the way? If you have acquired on 1st April 2023 and you have invested 35% in the listed equity shares in a domestic company. It is a specified mutual fund. What about market linked debentures? You are invested in a debt security, and the returns are market returns. And SEBI has also classified this as market linked debentures. This is called as market linked debentures. What about unlisted bonds or unlisted debentures? If this is transferred, or if it got matured or it got redeemed in, or but it should be transferred, matured or redeemed on or after 23rd July 2024. Yes, in all these situations, full value of consideration minus expenses, any expenses minus cost of acquisition, because it is a short term capital asset, there is no indexation. Yes or no? Yes. Next, what is forfeiture? Where due to negotiation, the person has given us advance for me selling the immovable property, but later on, due to any negotiations, he is not ready to pay the full amount. Yes, so in that situation, I am not giving back his advance. I'm forfeiting that advance. Yes, if this happens before 1st April 2014, when I'm selling the that particular capital asset, sale price minus cost of acquisition, from that cost of acquisition I will reduce. Yes, or if we are considering cost of acquisition as fair market value as on 1st April, or WDV and all, I will still reduce. Yes, but if that forfeiture is happening on or after 1st April 2014, then I will immediately, the year I'm forfeiting, in that same year itself, I will consider as income from other sources. Yes or no? Yes. If partition of HEF with a total partition or partial partition, gift, will, irrevocable trust, transfer by individual or HEF, or holding company to Indian 100% subsidiary Indian company, or 100% subsidiary company to holding company Indian company. In all these cases, what will be the cost of acquisition? Where previous owner, in the previous owner, for what price did he purchase? That will be the cost of acquisition. What about cost of improvement? If it is on or after 1st April 2001, then cost of he incurred on or after 1st April 2001. Who incurred? Either the previous owner and the assessee will be considered. What about period of holding? Period of holding will start from where the previous owner was holding. You have to start. What about indexed cost of acquisition? Cost of acquisition into year of transfer divided by year where previous owner was holding it. Yes or no? Yes. And what about bonds, debenture stock or deposit certificate you're converting into shares or stock? Cost of acquisition will be the bonds, debenture stock or deposit certificate, and period of holding also the same, bonds, debenture from that previous year you have to consider. And what about preference shares into equity shares? What is the cost of you purchasing the preference shares? That you have to consider. And period of holding from the year where you started holding preference shares, you have to consider. What about gold to electronic gold receipt or electronic gold receipt you're converting into gold? Then what is the cost of acquisition? Where the first earlier what you have purchased, that you will consider, and also regarding the period of holding. Yes, before conversion, what you are holding, that you will consider. Yes or no? Yes. And what is section 50C? Immovable, where stamp duty value is more than the consideration. In that situation, you have to see what? If stamp duty value is more than 1/10% of the consideration, then face full value of consideration will be what? Stamp duty value. But if the stamp duty value is up to 1/10% of the consideration only, then in that situation, full value of consideration will be consideration only, not stamp duty value. But if there is fair market value as on 1st April 2001, if there is stamp duty value as on 1st April 2001, then how will you calculate the cost of acquisition? How will you calculate cost of acquisition? At what price you purchase, cost of acquisition, or the amount which I'm going to say, whichever is higher. The amount is fair market value as on 1st April 2001 or stamp duty value on 1st April 2000, whichever is lower. Yes or no? Yes. If date of agreement and date of registration is not the same, In that situation, stamp duty value, should I consider the date of agreement or date of registration? Sir, in this situation, we have to see whether the consideration received is in prescribed manner or consideration received is not in the prescribed manner. If SDV on the date of agreement should be considered when you have received consideration in the prescribed manner. If SDV is if the consideration is received not in a prescribed manner, then STDV should be considered on the date of registration. Yes or no? Yes, which is on the date of transfer. And what are the prescribed manner? Account paycheck, account paying bank draft, use of electronic clearing system ECS, a debit card, credit card, IMPS, RTGS, NEFT, UPI, net banking, and Beam Aadhaar Pay. Yes or no? Yes. And if the stamp duty value is more than fair market value, yes, stamp duty value is more than 110% of the consideration, but also stamp duty, you should consider full value of consider stamp duty value, but stamp duty value is more than fair market value. In that situation, you will tell the assessing officer, fair market value, stamp duty's value is more than fair market value. In this situation, assessing officer will tell it to the valuation officer. Valuation officer will see whether my value or the stamp duty value, which I have earlier said, whichever is lower, whichever is stamp duty value by the valuation officer or the stamp duty value, whichever is lower, will be considered the full value of consideration. If assessing officer does not refer to the valuation officer, the stamp duty value itself will be considered as full value of consideration, but assessee can go and give an appeal to Commissioner of Income Tax Appellate Authority. Yes, and if it is between the court or any other authority, full value of consideration will be stamp duty value. But if that judgment is passed that you should consider consideration not stamp duty value, then assessing officer has to calculate according to that. Yes or no? Yes. And section 50 CA. If unlisted shares, what will be the full value of consideration? You have to see if the fair market value is greater than equal to consideration, you will consider the consideration only. But if the fair market value is less than, the consideration, which is consideration is more, in that situation, you full value of consideration, you will consider fair market value. And what about if consideration, the person saying, I don't know how much amount I receive as consideration, I forgot. Consider fair market value as consideration. Yes or no? Sir, what is slump sale? So any kind of division, any kind of undertaking, if you want to transfer, yeah, this transfer is not that I'm transferring for this particular asset at this much price, this particular asset at this much price, and I'm reducing the liability. No, this particular division, all the assets and all the liabilities you keep. But you will see a consideration, some 2 crores, 5 crores, 10 crores, 100 crores, a lump sum consideration you will see. Yes, this is what is slump sale. And how will you calculate slump sale? One, full value of consideration, you will calculate fair market value 1 plus fair market value with 2, fair market value 1 or fair market value 2, whichever is higher. Yes, this you will calculate. And what is fair? In the exam itself, they will mention what is fair market value 1 and what is fair market value 2. Minus, if there is any expense, you will reduce, net consideration will come, then you will reduce cost of acquisition. How will you calculate cost of acquisition? Liabilities, you will calculate book value. What about the assets? If it is a depreciable asset, you will calculate you will take the WDV. And if it is a self-generated goodwill, or they have claimed deduction under section 35 AD, then you will not consider that, you will ignore that. Yes, and in case any revaluation has happened, then you will not consider revaluation of assets also. So other than WDV, if any asset, it will be of considered, taken as a book value. Yes or no? Yes. And a CA will give a report that the calculation of this cost of acquisition, the net worth is done correctly. Yes. Then you'll come with long-term capital gain or short-term capital gain. How will you when will you know this is a long-term capital gain? Please try to understand. Don't remember this more than 12 months, more than 24 months, more than 36 months. Straightly, if it is more than 3 years, if it is more than 3 years, then it is a long-term capital gain. If it is within 3 years, it is a short-term capital gain. Yes. And if the net worth is negative, what will we take into consideration? If net worth is negative, then cost of acquisition will be nil. And if stock in trade is also transferred in on slump sale, we will not consider that as a PGVP. We'll still consider that in capital gains. Yes or no? Yes. If amalgamation takes place, do you think there will be capital gains? No. Why? Because an amalgamating company has transferred the capital asset to an amalgamated company. It is not a transfer. It is the same goes for demerger also. So, but for this, one more condition is there, that all the assets should be transferred. All the assets in an amalgamating company should transfer to the amalgamated company, including the liabilities. Yes or no? Yes. And at least 75% shareholders, what is this? Their holdings, the shareholders where they are holding 75% in the value. 75% in the value, they should be shareholders in the amalgamated company also. Yes. Then what will be the taxation for an amalgamate company? There is nothing. We told there is, it is not a transfer, no capital gain. What about shareholders who is getting shares of amalgamated company? That is also not a transfer, no capital gain. But the shareholders who is transferring the amalgamated company, what full value of there is capital gain, full value of consideration, how much amount you are getting for those shares, minus what is the cost or index cost of acquisition, what cost you have taken, in what share price you have paid for amalgamating company, that you will take into consideration. Yes or no? Yes. And you will consider the amalgamating and amalgamated period for the period of holding. Yes. Yes. And if the amalgamated company has transferred the capital asset, then full value of consideration, what amount you have received, minus index cost of acquisition, that also in the amalgamating company, at what price they have purchased, that you will take into consideration. Yes. Yes. And what about demerger? Is demerger a transfer? No, demerger is not a transfer. Yes. So if all the assets and all the liabilities is transferred to the resulting company, and 75% in the value of shares is also held by the shareholders of the resulting company, then one where you are transferring asset and liability, it should be of you should transfer in book value, not in revalued amount. And if shareholders of resulting company, they will get based on the proportionate basis. So for example, let's say 90% of those shareholders, on the proportional basis, on based on how many number of shares you are giving, on proportional basis, those shareholders will receive it. Yes or no? Yes. For example, demerged companies having 1 lakh shares. Yes, but resulting company is giving 2 lakh shares. So on the proportional basis, they will get it. Yes. So demerged company, what is the taxation? No taxation, because there is no transfer, no capital gain. What about shareholders? Because they are getting the shares of resulting company. No, it is not a transfer, no capital gain. What if shareholders is transferring their shares of a resulting company? Then what amount you are receiving, that is full value of consideration minus cost of acquisition. How will you calculate cost of acquisition or index the cost of acquisition? Cost of acquisition of a demerged company into what is the net book value of the asset of that particular transfer demerger, where we have separated one thing is demerged, that what is the demerge, what is the net book value divided by what is the net worth before demerger, what is the net worth of the demerged company before demerger, that you will consider. This is how you will calculate the cost of acquisition. Yes. And long term capital gain or short term capital gain, you will calculate based on what the period of holding will be resulting company and demerged company holdings. Yes or no? Yes. And what if the shares of demerged company, which those who have not transferred, the earlier who have not transferred, if they have transferred it, What is the full value of consideration and what amount they have purchased minus this particular amount, note 1, cost of acquisition, interest cost of acquisition. This you have to minus. The balance what you are getting is the long term capital gain or short term capital gain. Yes or no? Yes. And what about resulting company transferring the capital asset? Same. Full value of consideration minus cost of acquisition or index cost of acquisition. That you will consider what the demerged company purchase, and the long-term capital gain, short-term capital gain will arise. You will consider the demerged company period of holding and resulting company period of holding. Yes or no? Yes. In case of liquidation, do you think that shareholders will get taxed? No, shareholders will not get taxed. Am I right? No, company is the one who will not get taxed. Shareholders will get taxed. Yes or no? So for company, no capital gain. For shareholders, there is a capital gain. If because they are the one who's receiving money by giving up their shares. Yes or no? Yes. So how will they get taxed? One, what is the full value of consideration? How much money they have received, and if they have received any other asset, then they will consider the fair market value. Yes. Minus deemed dividend will be considered. Minus deemed dividend. What is deemed dividend? We will also revise this in income from other sources. That amount minus what is the cost of acquisition? How much amount they have taken? They have paid for the particular shares. Remaining is the long-term capital gain or short-term capital gain. Yes or no? So yes or no? Yes. And shareholders transferred the other asset, which is they have while getting liquidation, they would have received the other asset. Yes, that if they are transferring, what is the fair market value on the date of distribution will be considered as cost of acquisition. Yes or no? Yes. And what about buyback? What about buyback? So for buyback, there will be two kinds of buyback. One is buyback of shares. Next is buyback of specified securities. If it is buyback of specified securities, for company it is exempt. Share it is taxable in the hands of shareholders. So how much amount they are how much amount shareholders is receiving minus what price they have purchased for the cost for that particular specified securities to get, then it will be long-term capital gain. It will be long-term capital gain or short-term capital gain. Yes or no? Yes. What about buyback of shares? Up to 30th September 2024, this will be the calculation. So up to 30th December 2024, this will be the calculation. For shareholders, it is exempt. It will be taxable for the company as capital gains. And what is the income? Buyback price, what amount the company is paying, buyback price to the shareholders minus what is the issue price of that particular shares, including if you have issued at a premium, also including the premium you will consider. And what is the tax rate? 23.296 percentage. Yes or no? And this will you will be paying within 14 days. But from 1st October 2024, what is the situation? From 1st October 2024, shares in the hands of the company is exempt. In the hands of shareholders, only it is taxable. And how will you calculate it? Sir, whatever amount you are getting as buyback price, it will be chargeable under the head income from other sources. Yes or no? And capital gain also you calculate. How will you calculate capital gain? Full value of consideration is nil because the amount you have received, you have considered it as income from other sources. And but cost of acquisition, how much cost of acquisition, how much price you have purchased for the shares, that you will consider. Then what will come? Long term capital loss or short term capital loss will come. Yes. Yes. We have also seen an example. Yes, example with it. Yes. So what and all are the tax rates for capital gains? One, long-term capital gain. Next, short-term capital gain. Regarding long-term capital gain, there are two kinds of sections. One is section 112 and next is section 112A. And regarding short-term capital gain, there is section 111A and there is other than 111A. Other than 111A, it is directly slab rate. Normal rate, slab rate should be applied. Now, we have to see what is section 111A, what is section 112A and then section 112. First, we'll see what is section 111A. For this, tax rate is before 23rd July 2024, the tax rate was 15%, 15%. On or after 23rd July, if the transfer takes place, it is 20%. Now, what and all are the kinds of capital asset if you transfer, it becomes short-term capital gain under section 111A. 1. The transfer of equity shares, the transfer of unit of equity oriented funds, and the transfer of business trust. If you transfer any of this and you have paid securities transaction tax, STT is paid, then on transfer, in that situation, you have to pay tax under section 111A. Yes or no? Yes. But for IFSC, if the STT, if the recognized stock exchange is located in IFSC place, then in that situation, if STT is not paid also for any of this transaction, 111A will get attracted. Yeah. Yes, and for this chapter 6A deduction will not be there. Next, what is long-term capital gain under section 112A? Even for this, the capital assets are, one is equity shares, next is units of equity oriented funds, and next is business trust. But here STT where you are paying, yeah, STT has to be paid. But for equity shares, it is also for when purchasing you have to pay STT, and for sale also you have to pay STT. But for equity oriented funds and business trust, only on transfer STT is paid. Great. Yes, and if the recognized stock exchange is located in IFSC, then in that situation it's completely okay if you did not pay STT. Yeah. And here for section 112A, yes, chapter 6A deduction is not available, and in chapter 1 itself I have told you, even debate also you cannot take it. Yes or no? Yeah. Next, if regarding the cost of acquisition, if it is acquired, if before 1st February 2028 to 1st February 2018, if it is acquired before 1st February 2018, which is on or before 31st of Jan, you have acquired it, then in that situation, how will you calculate? You will calculate the fair market value on 31st of January 2018 or sale value, whichever is lower, the amount will come, or from that you will compare cost of acquisition, whichever is higher will be taken as your cost of acquisition. But if the cost of acquisition is on or after 1st February 2018, then at what price you purchase, that you will consider. Yes, for this there is for section 112A there is no indexation benefit. Next, fair market value. If you have to calculate the fair market value as on 31st of Jan 2018, yes, for this, if the shares or units are listed, then in that situation you have to see whether the trading has happened on 31st of Jan 2018. If it has happened, you have to take the highest price which has been quoted, you have to take. But on that 31st Jan 2018, if there is no transaction happen, then what is the last trading session happened before 31st of Jan, that will be taken, and that to the highest price will be taken. Sorry, sir. And if it is unlisted as on 31st of Jan 2018, yes, then let it be shares or units. Then regarding units, you have to take net asset value NAV as on 31st of Jan 2018. But regarding shares, if it is not listed as on 31st of Jan 2018, but listed on date of transfer, then fair market value will be cost of acquisition into CII, cost inflation index, as on for financial year 17-18, which is 272, divided by when did you purchase, or if you purchase before for financial year first 1 to financial year 2001 to, then CII 01 or 02, whichever is higher, that will be taken. I hope you guys know this. Next, long-term capital gain under section 112. If we are transferring listed securities other than units, if we are transferring listed securities other than units, or we are transferring zero coupon bonds, then what will be the tax rate? You the lower of 10% without indexation or 20% with indexation. Sir, why did I write this? And this is not applicable. I don't know whether it got erased or I did not discuss this. This is not applicable with the effect from 23rd July 2024. So till 23rd July 2024, this will be the situation. On or after 23rd July 2024, this will be the situation. 12.5% will just get attracted. That's all. So before 23rd July 2024, lower of 10% without indexation and or 20% with indexation, whichever is lower. That will be the tax rate. Yes, sir. Yes. And but if you are transferring unlisted shares or unlisted securities of closely held company, then if it is a non-corporate or non-resident, or if it is a foreign company, then what will be the tax rate? If tax rate will be 10% if the transfer took place before 23rd July. Otherwise, it will be 12.5 percentage. Yes or no? And then in case of other SSCs, it will be 20%. It will be 20% if it is before 23rd July, and on or after 23rd July, it is if it is on if it is 12.5% on or after 23rd July 2024. Yes, but I hope you guys know what. No, 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 no. Without indexation, on or after 23rd July, is there indexation? I'm so sorry, I did not write out. On or after 23rd July 2024 without indexation. Before 23rd July, there is indexation. You'll do it, yes or no? Yeah. And regarding other long-term capital gain, before 23rd July, it was 20%. It got reduced to 12.5%. I know on or after 23rd July, there is no indexation. Yes or no? Yeah. And regarding if you are transferring an immovable property and you have purchased the immovable property before 23rd July and you are transferring it on or after 23rd July, then in that situation you can even claim indexation after you are transferring on or after 23rd July. But during the index, during calculating the total income capital gain, you will not calculate the indexation. You will calculate the indexation for what? While calculating the taxation purposes. Yes. And what is the tax rate? Lower of 12.5% without indexation or 20% with indexation. Yes or no? Yeah. And chapter 6A deduction will not be applicable for section 112 and surcharge of either 25% for a new tax regime and 25% or 37 percentage for old tax regime will not be applicable for triple 1A, so short term capital gain, or long term capital gain 112, or long term capital gain 112A. Yes or no? Yeah. And if the total income excluding 111A, 112 or 112A, if it is less than basic exemption limit and the assessee is an individual resident or individual HUF resident, then in that situation, first you will reduce the basic exemption limit from that short term capital gain under section 111A or 112 or 112A, and remaining, for the remaining you will do the tax calculation. Sir, yes or no? Yes. Now we will see the exemptions. First exemption, section 54. If the assessee is an individual or HEF and he has transferred a residential house property and it became a long-term capital gain, then in that situation he can get exemption under section 54 when he purchased residential house property in India, that too only one residential house property he purchases. But if the long-term capital gain is up to 2 crores, then in that situation, he can also buy another house property. So he can buy 2 house properties and claim exemption for those 2 house properties. Yes or no? Yes. But this purchase you have to make when? Either from the date of transfer, before 1 year before that itself you have to buy, or from the date of transfer 2 years after that you have to buy. But in case you are constructing it, 3 years, within 3 years you have to construct it. Yes or no? Yes. And what is the amount of exemption? What amount you have invested or long-term capital gain, whichever is lower. Yes or no? Yeah. For this capital gain account scheme is there or not? Yes, sir. What is capital gain account scheme, sir? Sir, we told that within 2 years or within 3 years you have to do it. But how do we know that within 2 years or 3 years you will purchase? So that amount please kindly put it in the capital gain account scheme, and you have to withdraw only and only for utilization of this purchase of house property. Yes or no? Yes. And where you have purchased, sir, can I immediately after purchase can I sell? No, you have to keep it in lock-in period for 3 years. Yeah, then only you have to sell. Next, section 54B. What is section 54B telling, sir? If the assessee is an individual or HEF and urban agricultural land, he sold, and that too this urban agricultural land he has been using it for he has been doing agriculture for the last 2 years, either by himself or by the HEF or by parents, and it is either a long-term capital gain or short-term capital gain, then he can claim the for that long-term capital gain or short-term capital gain he can claim exemption under section 54B. If he purchases agricultural land, it doesn't matter it is a rural or urban, he can claim exemption, but he has to purchase it within 2 years. Yes. And what is the exemption? How much amount he is investing, and what is the long-term or short-term capital gain, whichever is lower, that is his exemption. Yes or no? Yes. For this, can I put the amount in capital gain account scheme? Yes. And what is the lock-in period? 3 years. Next, section 54D. Any assessee where they have given up their land and building with respect to compulsory acquisition, central government took away their land and building, and this land and building is what? Is an industrial undertaking, and it is used, and that too this industrial undertaking, this business in that particular industry, this business is used for 2 years. It is an industrial undertaking, and it is being used for 2 years, and the central government has compulsorily acquired this particular land and building. Then in that situation, he purchases and the land and building for that industrial undertaking. Then he can claim exemption under, whether it can be long term or it can be short term, he can claim exemption. Yes. And this you have to purchase it within 3 years from date of transfer? No, from the date of he receiving the money from with regard to compulsory acquisition. So when he receives money from that date within 3 years. Yes or no? Yes. And here, what is the amount invested or capital gain, whichever is lower will be considered. Is there capital gain account scheme? Yes, sir. And he has to hold it for 3 years. Yes. Regarding section 54EC, any assessee, if he purchases if he sells the land and building, this should be a long-term capital gain, and he purchases, for him to claim exemption, he have to purchase bonds by NHAI, RECL, IRFC and PFC, and this particular bond should be redeemable only after 5 years. If this is done, he can claim exemption, but from the date of transfer within 6 months he have to purchase the bonds. Yes, sir. Yes. And amount invested or capital gain, but whichever is lower, but this should not be more than 50 lakhs. It should not be what the exemption he cannot claim more than 50 lakhs, and he should, what is the lock-in period? 5 years. Next, section 54F, individual or HEF, where he transfers any long-term capital asset other than a residential house property, and it should be a long-term capital gain, and he purchases what? One residential house property. And can he have more than one residential house property? No, only for claiming exemption, which house property is purchasing, that only that should be there. He should not be holding another house property. Yes or no? Yes. Next, when should he purchase it? Either before transferring the long-term capital asset, 1 year before, or 2 years after, or 3 years, within 3 years also you can do the construction. And can he claim, sorry, can he put the amount in capital gain account scheme? Sir, what is the lock-in period? 3 years. Yes or no? Yeah. But how to claim exemption for this? For this, long-term capital gain into how much amount I'm investing divided by what is the net consideration. And if the amount invested is more than 10 crores, the more than 10 crores, for example, I have invested 11 crores. So the excess amount will be ignored. How much I invested? 11 crores. 1 crore is the excess. I will ignore that in the calculation purpose. What is capital gain account scheme? So before me filing the return of income, I have to put the amount in the capital gain account scheme, and I have to utilize that within the period which I have mentioned, within 2 years, within 3 years, within 6 months. Yes, I have to utilize it. And if I have not utilized it, then that becomes a problem. It will get taxed. It will get taxes or no. And if regarding section 54 and section 54F, if I have invested more than 10 crores, then the excess amount will be ignored. Yes or no? And what is the cost of new asset? What amount I'm investing in the asset plus how much amount I have put in the capital gain account scheme. This is the amount. Yes or no? Yeah. I told that lock-in period within, you should hold it for 3 years. Yes or no? But what if I did not hold it for 3 years? I sold it. Then in that situation, sale price minus cost of acquisition. From that cost of acquisition, you will minus also how much exemption you claimed. Then that will be the capital gains. Yes or no? So you will reduce how much amount, how much benefit you gained from that exemption. That will be reduced. Yes or no? Yes. But regarding section 54F, what is section 54F? If I transfer any long-term capital gain, any long-term capital asset other than residential house property, remember? Yes. Regarding that, you will not reduce the how much exemption you claim from this. You will separately tax it. You will separately add, and you will separately tax it. Yes or no? Yes. And section regarding 54EC. What is section 54EC? Bonds. If you purchase bonds, yes or no? If you purchase bonds, but what did you do? How much I should hold it for? How much lock-in period? 5 years. But instead of me selling, I am keeping that as a security, and I'm taking loan. In that situation, it is deemed that actually this is, you're converting into money, and lock-in period is removed, and it is taxable. It is considered as it is taxable. Sir, yes or no? Yes.